Where is gold heading? We've got our special report. It continues. My guests are George Gero, Vice President of Global Futures at RBC Capital Markets, and Jeffrey Nichols, Senior Economic Advisor to Rosland Capital, also Managing Director of the American Precious Metals Advisors. Gentlemen, we're talking about some new products that are coming onto the market that really are a response to the popularity of investing in gold.
Yes, by institutions, and because of the institutional demand, there are two dynamic new products coming from COMEX on the 18th of this month, which will be a VIX, which is
a volatility
index on gold, and a VIX on crude oil.
And why do institutional investors want these kinds of products?
The institutions like to hedge both their long positions with options and with volatility indexes. And that's very important for an institution to be able to risk manage. And risk management today is the key to all major institutional business. So you'll see a lot of institutional interest develop. And then for the hedger who doesn't have all that large millions, but is either a coin dealer, coin collector, or buying small amounts of gold or gold coins, we have the 10-ounce micro contract. And if you have 10 of those contracts together, you can turn it in for 100-ounce gold bar, exactly the same as the COMEX 100, which is IAU, an ETF that also delivers the COMEX 100, or 400 ounces, which is the GLD, which is the World Gold Council's most popular and biggest ETF.
Jeffrey, does this mean that other investors all over the world, whether they be located in China or indeed in Europe, they're now just going to have more opportunity to invest in gold and it feeds on itself?
There is more opportunity. One of the things I've talked about a lot in the last few years is the evolution of the gold investment infrastructure, the development of new markets and new products around the world that make it more accessible for more investors to enter the market, both small-scale retail investors who might buy coins or small bars, as well as institutional investors who are going to buy large bars or may be more interested in ETFs. But definitely this is bringing more players and is raising what I would call the long-term equilibrium price of gold.
And when you talk about the price of gold, I have to ask you, by the end of the year, by December 31st, do you have any idea what the price of gold might be?
Well, I really want to hear Jeffrey's take on that one.
Well, ever since I've been on your show, I've been talking about $1,500 by year end. It looked a little maybe questionable to some when I first mentioned that, but today it doesn't look unusual or unreasonable. We're counting on gold rising to the vicinity of $1,500 late this year. And in the next several years, 2,000 followed by 3,000 and maybe still higher. Importantly, the next low in the gold market after we go to such heights will probably be well over $1,000.
George Gero, what are your thoughts? I give you about 30 seconds here.
December will be the biggest month in COMEX as we have to roll over maybe 400,000 plus contracts into either February of next year or April of next year. And by the way, we've seen business in 2012 and 2013 and 2014.
And when you say business, you mean people buying contracts for future delivery?
And rolling them into those longer-term deliveries because people want to be in gold for the longer term. That is underpinning the market now. As far as price, we'll see if it's $1,500 or $1,300.
All right, somewhere in between.
In between.
All right, well done. George Gero, RBC Capital Markets. Jeffrey Nichols, always a pleasure at Rosland Capital. Thanks very much for your insights into the precious metal gold.